America's largest home builder, DR Horton, just reported a dramatic warning for the 2025 housing market that you all need to be paying attention to. You can see Reuters just reported on this, indicating that DR Horton sees downbeat 2025 sales on buyer uncertainty. Their shares went down 11% on this earnings report. And I'm going to tell you what's particularly scary is what I'm seeing on prices of houses right now in DR Horton communities. Like when I go on Zillow and look at DR Horton homes across Florida, I'm seeing lots of big price reductions. Take a look at this, everyone. The owner of this DR Horton house in Ocala bought it for $360,000 in June 2022 and is now selling it 2 years later for $325,000, a 10% loss on their purchase price. Meanwhile, in the same community, there's another house that the owner bought for $305,000 in July 2022 and is now selling for $280,000. And so we're starting to see anecdotal evidence that prices and values are falling in DR Horton communities across states like Florida and Texas. And even DR Horton themselves are getting in on this. If you look at their new buildable floor plans in this community in Ocala, you can see they now have floor plans for as cheap as $250,000, and they're basically undercutting the owners that they sold to 2 years ago with newer floor plans at cheaper prices with big mortgage rate buydowns. So this is the other thing that the builders are doing, is they're aggressively buying down the mortgage rate for the people that buy their homes. In the case of DR Horton, their CEO just admitted on their earnings call that they're buying down rates to 4.5 to 5.5% and typically like to stay 1.5% below the market mortgage rate, which means that DR Horton is undercutting the market in multiple ways. They're desperately trying to liquidate their inventory and build even more new homes into the future, and they're going to do almost anything that they have to do in order to make that happen. Because I want to show you folks this. The average price of a DR Horton home is $375,000 according to their earnings report. Their typical buyer might put 10% down for a loan amount of $337,000. And so if you were to buy that house at a market mortgage rate of 7%, your monthly payment would be $2,250 a month. However, if you were to get a 5.5% mortgage rate that DR Horton buys down, your monthly payment would be $1,900 a month, saving you $330 a month or 15% on your monthly payment. And in a second, I'm going to get into whether this is a good idea for you as a home buyer to buy from one of these big builders like DR Horton Lennar with a big mortgage rate buy down, because there's pros to it and there's cons to it. But really what you got to understand is that the reason the builders are doing these aggressive mortgage rate buy downs and why they're starting to cut the price is because they see a softening market with skyrocketing inventory and reduced buyer demand. And this is what scares me about the builders right now, is that they're building in the exact markets that are in a housing downturn right now. Their exposure is to states like Florida and Texas and Tennessee and Alabama, where the inventory is going through the roof and where the prices are starting to drop. Because take a look at this map, everyone. We're looking at the states that have the biggest inventory surplus. How many homes are on the market compared to long-term norms? If our state is in red, we are starting to become oversupplied. Like for instance, everyone, Texas is now oversupplied. You can see there's 115,000 active resale listings in Texas. That's the highest level in at least 7 years. So Texas is an oversupplied housing market. Florida, at the same time, is also an oversupplied housing market. We have 144,000 active resale listings in Florida, also the highest level in 7 years. And you can see it's these states in the South and Southeast where the inventory has skyrocketed and is now above long-term norms. These home builders, they don't build equally geographically across America. No. They focus on specific states and specific cities. In particular, DR Horton gets 68% of their revenue from these South and Southeast states. You can see 23% of their revenue comes from South Central, which includes Texas and Oklahoma. 26% of their revenue comes from the Southeast, which includes Alabama, Mississippi, and Florida. And then 18% of their revenue comes from East, which includes North Carolina, South Carolina, Georgia, and Tennessee. So this pocket of states here is 68% of DR Horton's revenue. And if we go back to the inventory map on Reventure app, we can see that it's these states that have the most inventory on the market and where seller price cuts are also highest and where the Reventure app home price forecast score is lowest. So Reventure app is forecasting declining values in many of these southeast and south central states. These just happen to be the ones that DR Horton is most exposed to. Now, I want to be clear, I don't think these home building companies are in a crisis. In fact, these home builders actually did very well during the pandemic, and the profits for these builders are still higher than before the pandemic in terms of their gross margin. DR Horton's gross margin on their sales spiked all the way up to 29% in the fiscal year 2022, went down to 23.6% in the fourth quarter of 2024, and is now forecast to go down to 22.5% due to slowing demand and the cost of these mortgage rate buydowns and incentives. And so if we go down to 22.5%, we'd be around this line. So that's still pretty decent. It shows they're still making money. However, they're not making as much money as they used to. DR Horton's net income declined from 1.5 billion in the same quarter last year to 1.28 billion this year. So that's a 15% decline in net income to go along with a 5% decline in revenue. So the story for these builders is that they're still financially healthy, but we're starting to see the cracks emerge in their financials due to the downturn in the housing market. These builders could only dodge the downturn in the housing market for so long. And I think we're going to continue to see these builders issue warnings on the housing market over the next 3 to 6 months, particularly in the South and the mountain states. Whereas I've told you guys on this channel, the South and the mountain states, these are the areas where home prices are dropping in America. Whereas if you go to the Northeast and Midwest and parts of California, the home prices are still going up. So we're in a very bifurcated housing market still, where there's some areas where prices are dropping, other areas where they're still going up. And it's imperative that you as a buyer understand the situation in your market. Because if we go back to this map and look at the Reventure app price forecast score, where am I forecasting prices are actually going to go up over the next year? Well, it's these areas in red on the forecast score where prices are going to go up. And in particular, you can see the states with the best price forecast are Connecticut, New Jersey, Illinois, Rhode Island, Wisconsin, New Hampshire, West Virginia, Vermont, Pennsylvania, New York. So if you're someone who wants to buy into a state with home price appreciation over the next year, it's going to be these states, predominantly in the Northeast and Midwest. And the reason that's the case, everyone, because I know this is a bit counterintuitive still to some of you out there, like why are these states over the last year still appreciating by 6, 7, 5%, where values are going down in Texas? Well, the reason has to do with inventory. There's an inventory shortage still, a supply shortage in these Midwest and Northeast states, while there's an inventory glut and surplus coming in the South. And one question I've been pondering on my mind is, should you guys as a home buyer out there or an investor look to take advantage of what these builders are starting to do? So these builders are starting to cut the price. DR Horton cut their selling price 2% year over year. A company like Lennar has cut their selling price around 15% over the last 2 years. For instance, you can see on this graph the average selling price for Lennar's new orders, according to their SEC filings, peaked at $511,000 in the second quarter of 2022. It's now down to $416,000. So actually, Lennar has cut prices nationally by closer to 18-19%. In a state like Texas, they've cut even more. In Texas, Lennar average selling price peaked at $352 in 2022. Now it's $251. So that's like a 30% reduction in average selling price in Texas. And Lennar is now offering homes at prices pretty similar to what they were prior to the pandemic. Now, some of that is due to the fact that the builders have started to build smaller footprints. So the square footages of some of the builder homes are declining, but unquestionably, if you're a buyer looking for value right now, the builders offer it, especially compared to the resale market. So if you go on the resale market and you try to buy a house from an owner who's lived in the house for 5 years, it's very likely that owner is stubborn, thinks their house is worth $100,000 more than it's actually worth, and it's just sitting on the market, not doing anything. Meanwhile, the builders are actually cutting the price and actually giving big mortgage rate buydowns. So the question is, should you as a buyer take advantage of that? Well, to give you more perspective on this, I'm going to show you some more listings in home building communities. And another one that kind of scares me, everyone. This is another house that was purchased in a DR Horton home building community. The way I figured that out is I typed in the address here, went on PropWire, and saw that DR Horton sold it to this owner 2 years ago. Well, DR Horton sold this house to this owner for $365,000 in July 2022. Now it's listed on the market for $290,000. So look at this, folks. The owner is taking a $75,000 loss, a 20% plus loss in just 2 years on this DR Horton home. And I'm just finding more and more examples of this, of people who bought in home building communities at the peak and are now trying to sell, and they are selling at a big loss. And the reason I think this is happening, and in this case, it looks like this was a short sale, as you could see, so the owner might have defaulted on their mortgage, especially on DR Horton homes, everyone, because DR Horton specializes in selling homes to people with low down payments. So if you go to DR Horton's supplementary data in their earnings release, you can see that 58% of DR Horton homes bought with a mortgage were with an FHA or VA loan. 58% were with an FHA or VA loan. And for those of you that don't know, the FHA is a first-time homebuyer program where the down payments are only like 3 to 5%. And the VA loan is a military loan program where the down payments are 0%. So quite literally, over half of the DR Horton initiated mortgage purchases in their communities are with little to no down payment, meaning that they're at much higher likelihood for issues down the line. The mortgage default rate on FHA and VA loans is much higher than the average for conventional loans. So it's also likely we're just going to see more mortgage defaults in DR Horton communities, which is going to lead to even more listings and even more price cuts. And this is just the warning that you got to pay attention to in the home building communities, is that it's likely, in many cases, especially in states like Florida and Texas, that if you buy in a home building community now, the value of your house might be lower in a year due to the builders pushing inventory on the market, cutting prices, doing mortgage rate buydowns, and then some of the other owners who bought with little to no down payment running into some financial issues and being forced to sell. That's the combination we're seeing. In addition, one other thing I want you guys to think about when purchasing any house is, what are you buying fundamentally? What's the intrinsic value of what you're purchasing? The value of real estate, or value of a house, is comprised of two things. One is the value of the land. The other is the value of the improvements. And it's actually the value of the land which determines your long-term appreciation. The value of the improvements actually depreciates because a house gets run down, you have to repair it just to keep it at a certain level. It's actually the value of the land that goes up over the long run, or should go up over the long run. So when you buy a house in late 2024 or into 2025, or just if you're coming up with a strategy into the future, think about buying land with intrinsic value. And what I think will really help a lot of you out there trying to figure out this housing market and where and when you should buy is zip code level data, everyone. And the first thing you got to understand is that home price forecast for your city and zip code and neighborhood. Is it likely that prices drop? You know, if we go out to some of these big home building communities outside of Tampa, we can see we have heavy downward price forecasts, which means that it's more likely that prices drop into the future. Now, conversely, can you maybe find an area with more stable prices where values will hold more in the short term? These would be these areas in red on the home price forecast. And then also validate how your metro area and county looks on the price forecast compared to other parts in America. Because as I told you numerous times in this video, everyone, prices are still going to go up in a lot of parts of this country. They're really going down mainly in Florida, Texas, Colorado, and Utah, as well as parts of Tennessee and Georgia. So search your location here on Reventure app and get into that zip code level data on the price forecast. In addition, if you want to look at some kind of home building specific metrics, I would encourage you guys to look at the housing unit growth rate in your city and neighborhood. If you see a massive housing unit growth rate, like out here in Riverview, east of Tampa, some of these zip codes east of Tampa, we see 56% housing unit growth rate in 5 years. That's crazy. That's telling you the builders are going absolutely nuts, that the intrinsic value of the land isn't as high because there's so much of it, so much home building, whereas these areas in blue actually have a contraction in housing units over the last 5 years from a structural standpoint. Maybe in the long term, in the very long term, 5 to 10 years, there's going to be more upward price appreciation because there isn't as much land. The value of of the land is higher in areas where there aren't building as many homes, or there's actually a contraction in homes due to supply constraints. So go to ReventTrap right now, sign up for a premium plan, and look at those two data points, the home price forecast and the housing unit growth rate, as well as 30 other premium data points that you're going to have access to. Created ReventTrap to help you guys figure that process out and figure out if it's a good idea to buy in your city and zip code. So go there right now, www.reventure.app, sign up for that premium plan. You're not going to regret it.